So let's say we're interested in looking at the pivot points with price. The first thing I'm going to point out to you is what the pivot point formula is and how it works. So if you have a look with me on the bottom right, you can see that the pivot point itself is the previous day's high for the whole day, the low and the close added together and divided by 3, so it's the average. And then they've got 3 other lines. They've got S1, S2, S3, R1, R2, R3, and the way they're calculated, S1 is 2 lots of the pivot minus the high, and so on. We can think of it another way, that these lines are looking at yesterday's average price overall. So you take the whole day of yesterday's trading range and just work out what the average is, and then you're looking at ranges above and below that level, and that's what the S levels and the R levels are. Now this was your homework to build systems this way, but what I want to do this week is, because this is effectively, depending on where you're slotting in, but it's effectively the first coaching lesson, and so I want to go through this in the simplest fashion possible and approach it just how I would expect you to, and show you too that often with the coaching I will present to you a running system, and it's great and it's very nice to see, but when you're building a system sometimes you can feel, well, where do I begin, and this takes me so long yet Greg can do it so quickly. Well, what I want to show you is, no, it does take me quite some time as well to work through and build a new system, and there are elements of it that aren't pretty, and it just requires a lot of hard work. Okay, so I do want you to pick up that from today's session. So what I'm going to do is bring up Ninja, and I'm going to go for a chart on the ES. Okay, I'm going to go for the 15-minute chart on the 1209 contract on the ES. And the start date I'm going to go from is the 12th of the 9th to the current date. And when you're with the because we're just going to spend a little bit of time on E-minis today. And with E-minis you've got 3-month contracts, and so you would go for from 3, 6, 9 and 12, and then the 12th day. So I've gone from the 12th of the 9th up until right now. So I'm going to press OK and load that up, and that should load up a blank chart for me. I heard there was a question during the week about how do I get NinjaTrader to connect to my FX and my E-minis at the same time. To do that you've got to buy one of their lifetime licenses. Okay, so we've loaded up our chart here. Okay, so we load up the chart. Now I want you to load up your indicators next. So I want you to click on pivots and click on new. Now a key detail that you could miss, and is very important, is you need to say that where it's getting its previous high-low close information from is from intraday data. And then you click apply. Another interesting point is width. Just make it a really large number, put 3000. So daily, calculated from intraday data, and width of 3000. The next thing I'm going to do is I'm going to make the pivots that I'm particularly interested in stand out. So R3 and S3, I'm going to make them really obvious. So a width of 3 and 3, actually I might even make them 4 and 4. There we are, so 5 and 5. Okay, so all that again, just so I don't want anyone to miss it. The type is daily, but we want it to calculate from intraday data. We want a width of 3000, and our R3 and our S3 is a size 5. then I'm going to say OK. Now the strength of a trading system comes from its ability to work on multiple markets and multiple charts. So while I'm showing you this on the S&P 500 E-mini, I want you to go away and look at it on the FX market. Or if you want on another E-mini market, look at it on, say, the Nasdaq or the Dow. So now you can see that they're really bold. So this grey line in the middle, now that you've had a look at the maths behind it, when you see that line, what it tells you is that was the average price of the previous 24 hours. Now the previous 24 hours goes from about there to about there, and on average prices lift and fall, but it would make sense that it was about there, wouldn't it? That adds up. And then you can see R1, R2, and then there's a big jump, isn't there, to R3. And then there's a big jump to S3. So that's interesting. Now, another thing that's interesting too that I want you to show you about the pivots is when the previous day was a low volatile day, the pivots are in close. When the previous day was a high volatility day, the pivots are out wide. So here the previous day's range was from about there to about there. See, that was about the maximum distance. And so R3 came in there and S3 came in there. Now let's go a day before and look how much they spread out. This gets amazing. Okay, so now the previous day to that had quite a large range. So because there was quite a large distance here, that means the next day our R3 and our S3 are quite wide. So can you see how on one day the R3 and S3 are out there and then they came right on in? That's a pretty big difference, isn't it? Well, why does that interest us? Well, why it interests us is because here we are dealing with an indicator where on if yesterday was a high volatile day, then today it has adjusted itself for high volatile conditions. If yesterday was just a boring know-nothing day, well, today they've come in quite tight and a reflection of the general mood of the market. Okay, great. That can be a real help to us. The next thing we need to do is just make some observations. And the questions we should be asking ourselves is, okay, how does it interact with each one? And I spent a week doing this once. I had a look at how price approached the pivot, how it touched it, how it left it, how did it bounce off it. Then I did that for R1, R2, S1, S2. I was looking for anything that is reliable, anything that repeats itself, that is out of the ordinary. And what I found was it can do things, but not of any particular significance with all the pivots really. But if it's getting out to R3 or S3, something has particularly spooked the market, because that's getting out so far from where it normally is that it's like having scared the cattle and they're just going for a big run. So if it's getting out to R3 up there or S3 down there, it's really moving and it's doing something that's not normally so characteristic of it. Can anyone think of some other indicators where it tells you when it's getting out to limits that are just uncharacteristic? I'll let you think about that one. Okay, so the next thing is the traditional way that pivots are used is price bouncing off them. So for example, let's say we were working with R2 and we're looking at price bouncing off R2. So we would begin here and we'd say price bounced off R2 twice. Very well. So with that in mind, let's go and look at all the times price bounced off R2. I'll get to R3, S3 in a minute. I just want to talk about R2, S2. So I'm skimming it back a day at a time and looking at a whole day with each shot. Okay, this day I would have, when it got to R2, expected a bounce, and it broke right on through. And then it bounced off R1. So then I might think to myself, well, maybe R2 is not so reliable, but if it's been up at R2 and comes back, how often does it bounce off R1? So I'm going to consider looking for that as well now. Okay, here's an opportunity where we have bounced off R2. So from memory we're up 3 for 1 loss, just in general observation. Here was a slight bounce. Coming into the after hours period. And here's a slight bounce up here. And I'm also looking to see how much it bounces by. So here it's bouncing a little. It's bouncing, that one bounced about 5 points. But some days it doesn't bounce much at all. Okay, and here it's just gone clean through again. So now that it went clean through and didn't bounce at all on my R2, my next question is, okay, from what I saw before, does it bounce off R1? In this case it did, but it went so far against me. It went more against me than the benefit of the bounce. Okay, so there's nothing of real interest there. What's interesting is this one's made its way all the way out to R3 and then it's bounced off R3, so maybe bounces off R3 are a smart idea. So I might continue to look at that as well. Okay, here it didn't quite make it to R1, it bounced before it got there. So now I'm asking myself, maybe every time it's 3/4 of a point in front of R1, maybe that's a point to bounce it because it's not getting all the way there. There's a concept called Frontrunning, which is, yes, it should bounce off a particular level. So let's say people were front running R1, I'm not saying they were, but if they were. But it's such a well-known detail that price was going to bounce off R1 for whatever reason, that there were so many orders at R1 that other people who particularly wanted to be filled very badly were willing to be just in front, and other people were willing to be just in front of them, and there were so many that price actually came up to it, didn't quite touch it, and then moved away again, and it was because there was so much front running going on. And so the people who were expecting it to bounce off R1, they were right, but they didn't get filled at all. And so when you're looking at that, if you're not aware of that dynamic, then you can look at this and you can say, oh, that wasn't a bounce, that was just price moved up to around that area and just happened to move back down. And so then what you do too is keep your eye out for actual front running. And speaking of which, here we go again. It's interesting too, the basic maths behind the pivot which I showed you at the start was actually, it dates right back to the very early days when the pits first opened. Remember in the movies how you see everyone standing in a pit yelling at each other, looking important with a suit and a big number on their chest? Okay, well, that's where they stand in the pits and do all the big trading. And you might say, well, what are they doing in those pits trading? Well, picture this. A lot of the big banks who need to change or hand over large orders between themselves and between each other, well, they used to phone it through to that pit, and then it would change hands verbally or with sign language, and those transactions were really large, millions of dollars at a time. And then and they would have their own sort of secret way of doing things, and one of their first secrets was these pivot calculations. In their head they'd be keeping track of the highs and the lows and doing these pivot calculations, and when it would get to certain pivots they would turn it on the spot. And those new to the game had no idea why at these random levels it was just suddenly turning. Okay, and in modern times things have become a lot more sophisticated, but the simple pivot it's interesting to see, is there in fact a pattern or not? And that's what we're looking at right now. So here we came up to R1 and bounced away. But also I'm looking at the time of day it did it. This did it came up to that level, or really if we're looking at even one point in front, it came up to that level a lot earlier, but it did it half an hour, or sorry, 15 minutes, no, half an hour after the market closed, or right at the end of the day anyway. And so it's the time of day at which it would approach it is important too, because you've got to ask yourself, what if it came up at 9:30 in the morning? So all we're doing is just observing. We're just looking and observing, and we're doing it for the current contract. Remember at the start we just loaded from when the 09 contract began, and each contract goes for 3 months. So we're just looking through that. So here we're looking, was this a point in front? It's actually about a point and a half in front for that bounce. Here it's done nothing, it's moved up through. Now look at this, isn't this interesting? It seems when price has been up to R2 and between R2 and R3, and then it's come back and it's bounced very clearly, and it's done that before the main cash market close. So that's interesting. Now while our tonight's session is on R3S3, we're making some interesting observations. And at this stage we're not looking at the S's, because otherwise there'd be too much to look at. Okay, so here's a bounce. And the reason why we're just going through like this, like lazy Sunday afternoon driving, and making these observations, is because then we're going to form some generalizations in our brain and decide, okay, that's where I'm going to look to build my trading plan. But you can't start making those generalizations from looking at 3 or 4 days and then running into it quickly, because your generalizations, your thinking, and your trading plan are all founded on some pretty misinformed ideas. So what we're doing this way is we're really gaining 3 months of trading experience without having to have sat there all that time and seen it in real time. I'm not interested in the S's at the moment. Okay, there was a bounce off R1 and it moved on down. That one was it's almost 2 points in front. So I wouldn't even call it front running, it's just moving on down. This one really moved, and I want you to observe what it did with R3. See how I got out to there. But at R1 we have got a bit of a bounce. But look what time it did it. It did it at 3:15 in the morning. Now what's going on at 3:15 in the morning? Okay, what's going on at 3:15 in the morning is Europe is starting up. And depending on my question of if I'm talking Eastern Standard Time or Central Time, US, as to exactly when in Europe it's starting up, but there's a 1 hour pre-market essentially in Europe where it gets going, and then the main market begins. And that in itself is an important time. In your e-course there's a module called Time Windows, which actually points out how you can divide the day up into significant times and just specialize in one particular window. Okay, this price came up to R1 again and it seems to have dropped away. And it came up again and dropped away. But what has caught my attention is here we're between R2 and R3, but when it came back down R1 did not bounce. Another thing that's catching my attention is the distance between R3 and S3 overall. Sometimes they're really far apart, sometimes they're really tight together. Now if they're very, very tight together, perhaps there's a point where how price interacts with the pivots becomes a little bit trivial, because they're so tight together that it's not even worth looking at. Here price came, it didn't seem to really bounce. It sort of has. I mean, if we had an equal size profit and stop, and depending on, let's say if we've got about a 5-point profit, we might be okay with this one. 66.62, it's about 4 points there, and about 2 points against us. Oh, about 3.5 points against us. Okay, interesting. And it's moved on down okay. Now, what's also interesting, and I want you to start noticing this, what time of day are we again? Okay, it's no coincidence that price is literally doing nothing through there, and then you've got one candle that has done more than the previous 3 or 4 or 5 hours. It's because of Europe kicking in. Okay, now our pivots are really tight together, but here they've moved up. Our price, has moved up, and it did bounce off that. But the distance between, say, the pivot and R1 is 1 point. Tiny. But it seems to be having an effect. Okay, this one's interesting. Now I've got a question for you. We break things into time slots. One thing I haven't talked a lot about is breaking things into day slots. For example, just looking to trade Wednesdays, for example. Now there's some generalizations that have been thrown about with the idea that Mondays and Fridays aren't worth trading, and particular months of the year are or are not worth trading, and all that type of thing. And that's really just, I think, depending on how you look at it, but certainly months of the year that are or are not worth trading. In the past, they've been based on the agricultural cycle in the biggest economy at the time, which was the US, and still is the US. And so there's been some merit to it, but it really is, most of it is closer to gossip than fact. But the idea, there is an element of it that can be helpful, and that is the idea of, for example, if you're interested in choosing just a particular day to trade that is going to do some decent shifts in the market, you can, for example, look at just Wednesdays, for example. One of our traders, for example, who was interested in monkey systems, found, I think it was Wednesdays and Fridays, they thoroughly enjoyed. And they found, for whatever reasons, Thursdays, their system just was always consistently average. So that's a really key detail to take away, which is just to take note of what day performs well and what doesn't. I was actually talking to a trader today, in person, who thinks that Wednesdays for their particular type of trading is because they like to trade the US cash session, which I do not encourage you to do because you'd be up at 2 in the morning. But they found that that's when they get the biggest shift is for their style is during the American cash on a Wednesday. So anyway, there's another bounce. And this one has not bounced at all. Again, noting the time. When was our previous bounce? Okay, this is interesting. Around the 10:45 mark. Perfect bounce. The day before, around the 10:45 mark, nothing. But we did have a slight movement down through here. And that was That was about half a point away. And that bounced it down 5 points. Quite good. Okay, look at this bounce. Wow. That's a 10-point bounce. That's really nice. When did it happen? Just on the market open. So I wanted to draw particular attention to R3, S3, but as we went I wanted to look at all the R's, just out of interest. Don't forget, something like this is a bounce, even though it doesn't look it, in that at some stage during this 15-minute candle following the one that touched R1, price has moved down. Probably 3 points. And now we're at the end of that. So we've just looked at the current contract month. Okay, so now I'm going to ask the question. No, that was not glamorous, that was not high-tech, it was not exciting. But when you manually sight the charts like that with no preconceived ideas, you just, obviously you can't take it all in, looking at all, that's why I excluded the S's in this case. But when you have a look like that, would you agree with me that you now have a more informed opinion on how the pivots are working with price on the ES for the current contract? Great. And now when you start thinking, alright, I'm going to start writing a trading plan, and I'm going to use OTD shorthand and take screenshots and that. Well, now you have a fair idea of the things that you're going to start shooting and how you're going to start approaching this. See, now you can start thinking to yourself, alright, I've learned quite a bit from this. I've learned that when Europe opens at around 3 in the morning Eastern Standard Time, there can be a spike and that can cause a bounce right there. I've learned that the bounces that happen during the pre-market all the way up until around 8 or 9 in the morning American time, they're okay, they're not bad at all. I've seen that bounces around morning tea time, American time, about sort of 10:30, 10:45, they can work wonderfully well, and they can not work at all. They can be completely miserable. And I've seen that just after the close of the main US business day, about an hour after, they can work too, but they seem to be a bit soft. And I've also noticed, let's say price does break up, it's not the slightest bit interested in R1. I wonder if, let's say, I had my R1 trading plan and it was supposed to bounce but didn't and just cruised on through. Okay, what about when it gets between R2 and R3 and turns around? Is there an opportunity to bounce it off R1 to the upside because it clearly wants to be in the upper territory? Well, they're things that now when I go through I'm interested in screenshotting and writing notes about. And so I'm going to do exactly that. Again, not exciting, but if someone was to ask me, what's your opinion on the pivot points on the S&P 500? Well, guess what? You're starting to be very informed. And you could probably talk for 10 minutes on the subject. Why? Because you've just taken that little bit extra time to manually have a look and see what the market's telling you. So now I'm going to take a few screenshots myself and some notes. So right here, I think this is the live market. To my right, yes it is. Now, an interesting key detail. This is the detail no one will tell you. Again, I was talking to one trader today, and guess what he does? See how the market's moving to the right? It's going up, it's going down, it's green, it's at 10.78.25. Where do you think it's going to go next? Oh, there it goes. 10.78.50. Okay. When you look at that and it's moving, and especially when it's moving quite a bit, that can bring emotion in right there. Watch this. I've just moved the current active candle off the screen. Now you look at that market there, there's no moving candle anymore because the moving candle's one click off the screen. Well, this trader I was talking to today, he does that. If he's going to trade, he wants to see the most active candle. But if he's just analyzing the current live market, he doesn't want to see the current live candle, because that sparks emotion, and you might see it start to go off in one direction, and then that will prompt him to think one thing or another. But he wants a completely vanilla, unemotional look at what the market's doing. So he just clicks that one candle out of the way for now. And then if he's going to make a decision about a live entry, then yes, he does want to see the current candle. I just thought that was an interesting point. See, these are the details you hear from real traders, but you don't hear them from people who just regurgitate what have you. Okay, time for a screenshot. Actually, I'm curious, who found that interesting? The idea of just clicking that candle out of the way. Okay, great. Alright, now I'm going to take some screenshots and write some notes. And I've spent years doing it this way, and there's no harm in doing it like this. I'm going to click on the top. I'm going to hold down Alt and press print screen. Alt print screen just takes strictly that window. Then I'm going to bring up my PowerPoint presentation, and I'm going to plonk it in. And the reason I'm doing it like this is because I want to line up all the times that it's dealt with, I think it's R1 and R2, and I want to line them up so that I can flip through them like palm cards, because it's really good when you can just go flip, flip, flip all the way through. Remember those little books when you were a kid, how they're a tiny little book and you'd flip them really fast and it was an animation? Well, when you get your trades and you flip through them like that, and you flip through, let's say, R1 bounces, then things start to stand out really quick. Now you can see the first bounce I actually haven't even written in, have I? I haven't even drawn that one in. But that's an 80 to 78, it's about a 2-point bounce. So what I'd do is I'd go back through again, and now, this time, the pivots are not so strange to me. They're not just lines and prices doing all sorts of things. This time I'm interested in a particular bounce. So I'm just looking at R1 bounces this time. I had every intention of R3, S3, but I think there was only one or two in this entire contract, so this has got my attention more. Okay, so this little thing here is tiny. It appears to be a tiny movement, but it's actually over a 4-point bounce, which is a lot. To put it in context for those who don't know, 2-point profit, 2-point stop is the stereotypical profit and stop on the S&P. Yes. I think it would actually be deadly to trade in the cash market anyway, the 2-point profit, 2-point stop. I'll give you some examples of why. Let's say you're trading at 10 in the morning in the American cash market at 10:59 and 50 seconds. Okay, so the time is 10:59 and 50 seconds, and you're trading at the 2-point profit, 2-point stop. At 11 o'clock, for whatever reason, all the sophisticated computer systems around the world that make decisions on just hourly candles kick in and send orders through. And they're doing them by today's measure with such ferocity that it can actually, just for a small moment, make the market jump by 2 points up and then back down before you even know what's happened. And because you just happen to be trading at that time, bang, you're gone. Okay, so it's very nice to be trading those small fluctuations, but something like that can just throw what you were doing. So with that, you need to look at, okay, pre-market isn't going to so much give you troubles like that, or trading a more solid move, or trading on hourly candles, which is what we like to do. When I'm trading hourly candles on the S&P, for example, one thing I'll do too is I will actually enter 10 seconds before the hour ticks over. So let's say I'm doing a monkey, and this is interesting for those of you who trade monkey trading systems on the ES. Let's say you always get in at 4 o'clock in the morning if everything lines up. Well, I would get in 10 seconds before the 4 o'clock. My computer is set to atomic time, and Windows does that. It's nothing fancy. Within your Windows clock, you just go time and date. and somewhere here, internet time, here we are, this computer is set to automatically synchronize with some American government clock. Okay, so that way I know to the second that I'm in sync. By the way, those things, even though they're supposed to be running on atomic timer, I've noticed sometimes they can be up to 5 seconds out, so go figure. But anyway, so I'll look at that, and I'll actually bring up the computer clock and just be watching the second hand coming around, and when it's got 10 seconds to go, if I'm manually entering, then I'll enter and make sure I'm in. I might enter at limit, and then with 5 seconds to go, if I haven't been filled at limit, I'll drag it to market, and it will throw me in. And the reason is because let's say I'm trading on hourly and I'm trading Monkey System. Historically, I've made all my decisions on how the hourly candles are. I know in the last 10 seconds nothing's going to change because those hourly systems aren't going to come and kick in the last 10 seconds. But I also know that about 1 second into the new hour, it's probably possible that it could go to my profit target even then because of this flood coming through. So I want to be in by then. Okay, so just a small detail again. I hope it helps. It's just food for thought. Okay, so here we are. I'm going to print screen this one and throw it in. And I'm going to keep looking. Okay, there's another one. That was a nice bounce. So I'm going to screenshot that and I'm going to put it in my library. And you could look at this and you could say it's very time consuming, don't you get tired of it? Well, I don't get tired of it, I actually get excited by it because as I start to build it, it's more and more rewarding because I think, well, this R1 thing is kind of fun. And I'm also in my head thinking about size of profits and stops and financially what it will mean for me. And it's a lot of hard work the first time, but the second time and the third time, when you approach a new market, you know more about the pivots and how they work, and you know more what to look for, and so you can skim through quicker, and then you can know what you're looking for and build a plan quicker. And because maybe hopefully you've got quite a few plans running, then when you see this, it isn't tiring to put together because to you it's complementing your income and actually freeing up your time. And so it's an absolute pleasure to put it together, and you're glad you can do this rather than a regular job. And you're putting in the hard work maybe for a few hours, maybe you might even invest 3 hours into building a solid plan. But now you've got a solid plan and you just need to keep it current with each new opportunity that comes along that also meets that, and maintain it. And that just adds to your arsenal of what you use for your trading. Okay, here's an opportunity here. We've got the R2, well the R1 was down here and it did nothing at all. So we'll screenshot that and add it to our collection. Now what time of day was that most recent one that gave us trouble? It was actually well before 3:15. That was coming in. That was about 2:30. Now that's the first time I've seen something at 2 in the morning, well before Europe's even open, where prices got up and approached R1. So if that's the only one like that, I might even say, if I don't like what I see there, I might even say any time before Europe opens at 3 in the morning, any bounce or any movement towards R1 there, I'm not interested in at all. And that one weeds it out entirely. Okay, there's that one there. It's about a 6, 7, well, it's as many points as you want, but it's about 7 points back down to the pivot. And you'll notice that one happened after 3 o'clock. So I'm adding that. Okay, I'm interested in this one. I'm also interested in the time it happened. Happened after market close and reopen. And it did drop 3 points, but it was kind of messy. I'm not sure I want to be trading that time of day. Depending on where you live, it's like about 6 or 7 in the morning. Or 5 in the morning, depending on our daylight saving and the US daylight saving. That's another reason why I recommend you set, as you know, I like to have my computer just running and thinking in US time, is my computer just changes with the daylight saving as the US daylight saving changes as well. So and you can actually run dual Windows clocks. I think on this one you might see. Yeah, have a look at this. I hope you can see that. I've got the US time, and then I've also got Gold Coast time, and I've also got GMT time, so I can just see the 3 times at once. Okay, I'm going to shrink this so I can just see it in perspective to the pivot as well. That's like a 7-point move down, and that happened at an unusual time. That happened at about 7 o'clock. It moved up to that point. See, if it happened at about 8 o'clock, I wouldn't call it unusual, because that's when we know a lot of US news comes out, at 8 o'clock. Now, is there anyone here who doesn't know why a lot of news comes out at 8 o'clock? I'm pleased to see some of our advanced traders are still picking up small details that can be helpful to their trading. Okay, again, I'll take a screenshot of that, but I'm not going to really be interested in that because of the time of day that was. Let's see how far we're getting with this. Okay, along the bottom, can you see my slider? Can you see how it's a third of the way from the right? So that tells me I'm 1/3 through doing this little project of taking the screenshots and making my palm cards. So the time spent on that, there's a fair bit more time if I went all the way back to the start of this contract. So I'll stop there and keep going, pretending I'd done it all. So now I'm going to write notes about it. So I'll go to full screen, have a look, and where's my... see if I can write on this. So this went from there down to there. Just see if it stays there. That's about, we'll call it, there's about 2 points in that. So 2 points, and to get that there was nothing in it. So I'm just writing a 2 and a 0. I'm also going to get a piece of paper on my desk here and write a 2 and a 0. And I'm also interested in the time it happened. Can you see the time it happened? 3:15. So I'm just going to write, it's close enough to 3 AM. So on my piece of paper, so it's 3 AM. So on my piece of paper, my shorthand consists of 2 points of profit was available. It went nothing against me to get that, and it happened at 3 AM. The reason I'm writing the times down is because when I look at my profits and stops, I can also see the times they're all happening. Okay, this one happened and moved down to there. Well, this level here. And that was a 4-point move. It also happened at 3:15 in the afternoon. To 3:15 to 3:30 would be that candle, so it'd be 3:30 to 3:45. I don't like it at all because it's late in the day. And I guess for our situation today, I'm just going to say it has to be before 3 in the afternoon, just to keep things simple. So I could write that down, and it is a success. It's moved down. It's 4 points, but I couldn't be bothered writing it in. So I'm just going to ignore this one because of its time. And on my piece of paper, I'm just going to write before 3 p.m. in the afternoon, because we know that that market close gets a little bit interesting. Keep in mind with that too, there's another interesting point. A lot of people do not like the market close on the mini market. So because of that, people who are willing to hold over that time are at an advantage, because there's a whole lot of trading plans and ideas that they can benefit from which others can't, which is to get in just before the market close, hold it over the market close, be willing for that, and then to ride it for a bit in whichever direction they're trying to go, and then hop out. They would have to obviously be more cashed up because they are holding daily positions, not intraday positions. So suddenly they're competing in a whole different league. And so they've got a whole different set of opportunities, which is interesting. So that's why I say always challenge every generalization. While I say I don't like that time, keep in mind too that that doesn't mean it's a write-off. Okay, this one happened 10:45. And it just moved on down, and it gave us as much as we wanted. Now because I was already in a trade, I'm happy to hold it past 3. I'm happy to hold it up to 4 or 15 minutes before market close. But you can see here, market close happened around there, and that's why it went quiet again, and it's pretty evident that the market has closed, because look how instantly the market volatility just died away. And that market volatility is really obvious because you had such a move and then it just went to nothing, so it's pretty self-evident there. So I'm going to write on my shorthand, this went from 10.96.50 down to 96, 86, 76, more than 15 points, but anyway, I'll just write 15 because I know I would have got that at least, and a lot more, but because a lot of the others I know didn't come near going that distance, this, no matter how large the number I make, it is absolutely going to be the biggest number, and because of the other trades I will not be going for even 15, so I'm happy to just cut my number down a bit and know that it was at least that. It went about 2 points against me, and it happened at 10:45. So that's what I'm writing on my piece of paper next. So I'm writing 15, 2 against, at 10:45 AM. Okay, this one did nothing, and it did it before 3, so I'm ignoring it, and I'm writing on my piece of paper another rule. I said it has to be before 3 PM, so now I'm going to say it has to be after 3 AM, but before 3 PM. So that sort of 12-hour window. And then I had a bounce to the R1 to the upside, which is interesting, but that isn't what I'm writing down right now that has really caught my attention. Okay, this one happened at around the 3:15 again. So I'm just going to say it was around 3 AM. This one happened about a tick in front, because that's 10.95 and this is 10.95.85. So yeah, I'd say it's a half a point or a quarter of a point in front. So I'm going to, how I'm going to do my shorthand for this is I'll have to make a manual note about that. So from, let's say 95.5 down to what, 85.5, well, down to 80. So 95 down to 80 at least, that's more than 15 points, so I'm just going to put my 15 in again. So there's 15 points, and I went 0 against, and it did that at 3 AM, so I'm writing 15, 0 against, 3 AM, and then I'm going to put a manual note in, which is, I would really want to be in 0.75 in front to get it. So I might put an FR for front run by 3/4 of a point to be safe on that. Otherwise I can't have that. So some of the shorthand I use, I go 15, 0 in brackets, 3 AM, and then I might put in square brackets my FR for front run. So when I see the FR in brackets, I can't have this at all unless I'm willing. Actually, I'd put 0.75 FR. And what that also tells me is if I want that, then that means I'm going to have to run them all by 0.75, which might be fine if it looks like I can pick up my 15 points occasionally with, you know, say a 4-3 point stop. Then yes, I am happy to front run them by a point, especially these ones that are happening in the morning sessions. This one here, see, they are working. This is the second one I've written off. Both that I've written off have worked, but it seems to be in that last 15-minute session. And it's after 3 o'clock, so it's just not my personal style. Okay, here we are here. What time did this one happen? 6:45. And I don't need to front run that, it went right on 10.85.50 down to, call it 10.79. So we'll just say there's 6 points in that. So 6 points, 0 against at around 7 AM. Okay, this is again well after that time of 3 in the afternoon, so I'm not really interested. Okay, so to write up my goodies, this is what I have so far. Just going to write up a few notes. So I've got an R1, that's the ES 15-minute chart. I'd call it the R1 bounce. It needs to be after 3 AM, before 3 PM, and then I'm going to just quickly write out my shorthand. And one last one. So from my very extensive backtesting and my large sample size, I'm going to say a 5-point profit, 4-point stop, well, I might even do this, 4-point profit, 4-point stop, just because I'm me, I'm going to make that 4.25 profit, 4-point stop, enter 0.75 in front of R1. Okay, so each morning at 3 AM, 3 AM is market open, which is around, depending on where you are in Australia, 5 or 6 at night Australian time, so it's about dinner time. So at about dinner time I can have a look at the charts once and see has price come up to R1 and gone beyond it. If it has, I'm not interested. Okay, it has to be below it still by that stage. Now if it is, I'm aware that it can get up to and do a nice bounce at about 3 AM. So I do want to be onto it. 2 out of my 4 samples have bounced off that time. So I'd set a limit, order to short with a 4.25 profit, 4 stop. Then I might just hop up at say 4 or 5 in the morning, just before the market closes at around 3 PM. If it's triggered, good on it. I'm either up or down 4 points. If it hasn't, whatever, I'll make careful note to take the trade off myself. Now, to actually trade that, how much of my time has been involved every day? Every day I have to check the markets at about 5 o'clock in the afternoon. I either set my order or I don't, and then I go to bed whenever I want to, and I hop up at about 5 or 6 depending on where you are, and check how everything's gone, and if it hasn't triggered, I just make sure that I take the trade off the board. So there we are, we've just gone right the way through, and we've looked at from knowing nothing about pivots to studying without any preconceived idea about the pivots, although we did have an interest in R3, S3 at the time. Something with R1 caught our attention, and for the current contract we went right through and looked at that. Then we took our screenshots and started to build a visual library, and then like flip cards we could look through quickly and see what was going on. We started to put our shorthand together, and with our shorthand we were able to see the time of day really does count, and we're able to see our profits, targets and stop loss, what it should be, and our percent success, and how we're going from that. At the moment my trading plan is running at 75% success. Now the reality is, and I hope you all know this, is that you need to put in a lot more. You need to look back a lot further than this. On the ES, for a monkey system, always look back a year, at least. A year and a half if you can. On the FX market, it's really easy to look back 2.5 years. And a reason why we promote the hourly very highly is because with hourly there's only 24 candles in there, where if you've got 15 minutes you've got so many more candles. And so with hourly it's really quick to just sight the whole day for whatever trading style you're doing and just bounce all the way through and go right the way back. And I can actually build a trading plan on hourly, depending on its style, in about an hour, just skipping back through really quick. Today we did it very slowly. I bet you can build it up quite quick. And we've come all the way to a trading plan which is there. So this is exactly what I expect of people when I say you have homework. This is the process you should be doing. It's not glamorous, it's not pretty, but the human eye and the brain, the supercomputer, is able to spot things and patterns that even if you had the fanciest of fancy mathematical systems and computers, you're not going to be able to spot those things. And even what we were able to spot by manually going back and sighting with the R1 just now was really nice. And this is the way to do it. Alright, let's see how we're going with that. Okay traders, your homework. Now that we've gone through that, I want you to, if you can, build an R3, S3 system, or just build anything you can with the pivots on any market you want. So it doesn't necessarily need to be R3, S3. Look at one on the ES, if you can, if you like your E-minis. Look at one on USD Japan. The reason we mention USD Japan is because it is quite... USD Japan is quite good with patterns that repeat themselves. And a third of your choice. I want to see a visual library. Well, I don't want to see them, but this is what I want you to create. Visual library, backtesting notes, the shorthand like you saw, so you know what's best for your optimum profit and loss. And you need to get to a point where your trading plans are so good that you're proud of them. Because when you're proud of a trading plan and it stops out, you stand tall. If you're using a trading plan that you don't really like and it stops out, then open up the door and welcome in all sorts of trading emotion. Then you're really asking for trouble. So you have to begin with trading plans you're proud of. The simplicity of this approach could be automated down the track if you want to go that way. Next week I'll also hint about the gap, and we'll start looking at that as well. But that should be enough to keep you well and truly busy. Thanks traders, it's been a pleasure, and we'll talk soon.